Hello, guys. This is Corey Durbin again, President of Shared Health Alliance. It's good to be back with you. I appreciate you taking the time, and I want to share another idea with you here that I really believe is another game changer for you. And it is an immediate wellness ROI, and it's really a FICA reduction program for the employer, and it also provides an employee incentive, a really nice financial incentive for the employee. So I want to share this concept with you guys. It's really a way of motivating employees to improved health, but also handing the employer about $425, $408 per year per employee, depending on the situation. So what is happening here is you're engaging employees toward better health. We use strong financial incentives for the employees. There's no net cost to the employer, and it actually reduces health care costs by the FICA reduction per employee on an annual basis. It gives a large financial FICA reduction. So how much can you save the employer is the question. Listen, this FICA reduction wellness program equates to about a $408 annual FICA reduction per employee. Obviously, for 100 employees, that'd be $40,800 annually in savings. For every 1,000 employees, $408,000. And for 10,000 employees, you got $4 million. Some of you have some access to some very large groups that this could be millions of dollars, if not tens of millions of dollars. The net cost to the employees for this program is zero, and it could actually create an increase in their pay. And the net income to the broker is $4 per employee per month. So it can create a nice residual income for the broker as well. Here's kind of what a pay stub looks like and how we create this win-win. If you look at the left side here, the monthly employee pay stub, if we've got an employee making $4,000 a month, the taxable income obviously would be $4,000. The federal income tax at 14.23%, $650 here on the left side of the page. The state income tax would be $144 at 3.6%, and then the matching FICA is the 7.65 at $306 per paycheck, creating a net pay of $2,900 for that $4,000 pay stub, $4,000 pay period. The way the wellness program works is what it does is it creates a $755 $125 deduction by purchasing a voluntary insurance program that rewards for various incentives, wellness incentives. It creates a claim charge. It's not so much a reward, it's actually a claim for certain activities that are done. That reduces the taxable income from $4,000 to $3,245, reducing the federal income tax from $650 to $462, $188 savings. The state income tax goes from $144 to $117, which is a $27 savings. And the matching FICA goes from $306 to $248, a $58 employer savings per employee. Then there is an indemnity claim reimbursement on the paycheck of $625 per month is really what this is looking at on a monthly basis. So you look at the net pay increase, it goes from $2,900 to $3,043, which is a pay increase of $143 for somebody making $4,000 a month, and an annual net increase to that employee of $1,716. So there you go. If you look on the right-hand side of this page, you see the employer breakdown, the same $4,000 employee, the $755 $125 deduction. We've got that $248 FICA, matching FICA, which is a reduction of $58, and then a monthly employer fee of $24, leaving the net employer savings of $34 per employee per month for a total of $408. In this particular example, we had 3,000 employees enrolled, approximately, for $1,224,000 in savings. I know I went through that quickly. Bottom line is we're handing the employer back a net of $34 a month, and you're handing an employee making $4,000 a month $143 a month back on their paycheck. What is happening here is there are various incentives, which essentially are claim charges for activities within the insurance policy. These include communicating with a healthcare coach, talking to a telemedicine doctor, getting your biometric screening, a DNA screening, or medical counseling, disease management activities, nutrition counseling, physical fitness, lifestyle habits, and there's some other things that equate to that same $625 claim reimbursement. We can go through those in detail, but just know that these things are automated. They happen electronically, so there is no claim form for an employee to fill out. What happens again is there's a $755 adjustment on the paychecks. It's an advance from the wellness company to the insurance company. So that $755 is advanced on the employee's behalf. If you look on the right side of this page, having the initial month's plan cost prepaid allows the employee to receive their $625 indemnity payment in the first month's payroll period. Then the $625 claim payment is for the completion of that initial HRA, that health risk assessment, and also triggers a contact from the wellness vendor. The employee assigns a claim payment to PRS for paying the first month's plan costs. The employer executes payroll, deducting the Section 125 for $755. And then simultaneously, there's a reimbursement to the employee of $625. The difference between the $755 and the $625 is the $130 employee fee for the insurance policy, for the wellness activities, for the coaching, for all the things involved in the wellness program. Then the wellness company sends the employer a final bill. The employer has payroll deducted the $130 and has the $24 employer fee that is remitted to via ACH for the premium. So there you go. Those are the 4 steps that makes this happen. It happens on the paycheck. It happens electronically. It's set up with payroll. The flow of funds is very easy here, guys. And no employee is ever out of pocket their money. It comes back simultaneously. And we can talk more about this, but if an employee doesn't do the wellness activity in a month, there's a 2-month grace period where they still get the claim payment. So you've got to understand a lot has gone in to compliance on this program. So there's a reduced employee cost. There's a net savings per monthly paycheck, reduced employer cost. We're using patented, proven population management techniques. There's individualized coaching and healthcare purchasing decision assistance. Appropriate application of the tax code has been applied. We're taking a legitimate Section 125 deduction for a fully insured indemnity plan. There's a reduction of the covered member's financial barriers to entry into the healthcare system. It can be added to any benefit plan regardless of the medical benefit carrier, so you don't have to go in and change the medical plan in order to institute this. You don't even have to necessarily be the agent on the health insurance. This might just be a situation where you go get your $4 per employee per month. But we've had certainly brokers that go and get AORs in this case because they save that employer $408 a year per employee. Flexibility and careful attention needs to be given to the payroll processing, and you don't have to be in the loop on that. You're taken out of the loop. It's happened behind the scenes. You don't have to be an expert on the payroll. This is a clear, provable result, and it can change the dynamic of that relationship you've got going on with this client or prospect. When you couple this situation with our RX program we also detailed to you, you've got 2 incredible ways to probably save that client hundreds of thousands, if not millions of dollars a year on their RX spend and on their FICA reduction. So 2 great opportunities. Let's talk more about this. I know you've got prospects that this can be a great fit for. This can actually work for a small group or a large group. The RX program is really for a large group self-funded prospect. Great opportunity here to win some business, guys. Let's go have a great end of the year and a great first quarter. Talk to you soon.